Why? And it's because those 8 banks are being instructed by the people above in the West to keep it down for a reason. And maybe it is to fund the military-industrial complex. Who knows? Point of it is that all manipulations end badly, especially when you see massive efforts by countries like China and India to accumulate everything that's not nailed down, and even do so in a clandestine manner by buying doré and concentrate from the miners that doesn't come off of an exchange, that isn't reflected in the price, so that they can have a strategic advantage that no one sees coming.
Dollar is in competition with gold. Gold is the anti-fiat, the anti-dollar. And there's no way you could have silver running to $200, $300, $500, $1,000 an ounce and gold not move. So in order to be able to keep gold in a box and be able to point at it and say, see, gold bad, dollar good, they've had to just sit on silver with paper contracts that are completely unbacked. I mean, they came out in the early 2000s.
The strategic importance of gold and silver is growing as countries, particularly in Asia, increase their reserves to strengthen financial stability. Andy Schectman, CEO of Miles Franklin, notes that this rising demand highlights the enduring value of these metals amid global economic uncertainties. Exchanges like the London Bullion Market Association, LBMA, and COMEX are seeing significant outflows as nations and large investors withdraw physical gold and silver. Schectman points out that this trend is tightening supplies and raising concerns about long-term availability. Schectman also warns that large financial institutions are manipulating prices through extensive positions in gold and silver derivatives. This creates discrepancies between paper markets and physical assets, leading to increased volatility. For investors, Schectman suggests that directly holding physical gold and silver offers a hedge against inflation and currency risks. As market distortions persist, securing tangible precious metals may be a wise strategy for preserving wealth. Now we'll show you the best clips of the latest interview, but first smash the subscribe button, hit the like button, and turn on notifications so you do not miss out our daily recaps.
Is done. I mean, the math is the math. The math is unworkable. There was talk a week or two back that they want to basically monetize the gold that's in Fort Knox and West Point, even assuming that we do have 8,300 tons, which I don't think, I mean, I think maybe we have 10% of that or 15% of that. But even if we had 8,300 tons, they want to revalue it from $42 up to the current 2,500, and that will raise somewhere around, I don't know, the number's about $600 billion. And they want to buy Bitcoin with that. And that's supposedly going to wipe out our debt. Well, I mean, you're talking about you'd have to have that $600 billion go what, 50-fold or more in order to wipe out the debt. And they're putting it into Bitcoin, which again, in my opinion, it's digital air. It's nothing. And we're going to find out when everything collapses that that's exactly what it is nothing but digital air. Well, that's exactly what's happened. The weaponization, it's not a new thing. The dollar has been weaponized for years and years, and they started ratcheting the weaponization up during the previous administration. And now you've got, they basically stole the $300 billion of Russian treasuries, and they're borrowing or using that as collateral to fund Ukraine. So it's been totally weaponized, and there's been pushback. The pushback has been the formation of the BRICS. And we're only 2 months away from the big BRICS meeting in Russia. And I think that very well could be, if you want to call it the reverse Bretton Woods moment, where the dollar actually loses reserve currency status because they no longer want to trade and use dollars for settlement. and the amount of dollars that have been used in settlement, that's been, it has been declining, but it's going to go off a cliff. And especially if they announce a 20 to 40% backing of their new currency, they're calling it the unit. If they back that currency with 20 to 40% gold backing, you'll see pure fiat currencies collapse and you'll see the price of gold explode. Stop, if you will, is November 5th. That's the election. And I've been on record since, I guess, November last year that I thought there was less than a 50-50 or less chance that there'd even be an election, because if it looks like the current administration is going to lose power, you will see some type of enormous false flag so that they can say, well, we would have had an election except for this. And I mean, the BRICS meeting itself, blowing up the dollar, that alone could throw markets into such a tailspin that they close and they just pull the plug out of the wall.
There has been a significant focus on the shifting global economic landscape, particularly concerning the BRICS nations, Brazil, Russia, India, China, and South Africa, and their movement away from the US dollar. Bill Holter highlights that these countries are increasingly seeking to trade real goods and services for other tangible assets, rather than relying on the dollar, which they see as lacking real value. This change poses a serious threat to the Western standard of living, potentially leading to a significant decline as the dollar loses its global influence. Holter explains how the United States is facing mounting financial instability due to its enormous debt, currently at $35 trillion, which is widely considered unpayable. The merging of the Federal Reserve and the U.S. Treasury, coupled with unsustainable economic policies, has placed the U.S. economy on a precarious path. If the financial system collapses, as some experts predict, it could trigger a severe economic crisis, leading to widespread financial hardship across the country. Moreover, the U.S. dollar's status as the world's reserve currency is at risk. The BRICS nations are working on introducing a new currency backed by gold, which could accelerate the decline of fiat currencies, including the dollar. If this happens, the global dominance of the U.S. dollar could end, leading to a significant shift in the global economic order and leaving the U.S. with diminished influence on the world stage. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
A common currency, and that these countries would need, of course, then they would need a central bank and presumably be held in China, which is an unacceptable loss of sovereignty, especially between countries like China and India with territorial conflicts. And well, you have the head of the BRICS New Development Bank who made it clear there are no immediate plans to create a common currency, which I agree. And even if they were willing to put aside their differences, it's hard to see what competitive advantage would ever have between to the current system. And then they talk about a gold-backed yuan or all. And they always go back to the Eurodollar system, and that we left the gold-backed system to go to the Eurodollar system because it was such a better system. And contrary to what people say, we had gone I think 180 years with no inflation and the greatest growth that the world has ever seen in a country by being on the gold-backed system. But I've been reading a lot of this lately, talking about this common fallacy is that there won't be a common currency, and maybe there won't be. And if you look at what they're proposing right now, it is not a common currency. They are proposing everyone having their own central bank digital currency, having their own monetary autonomy. That's number one. And if you look at the global GDP, and go 98% of all the gross domestic product of the world and the countries that represent that, every one of them has a CBDC in operation or development. That's number one. If you look at what's been done over the last year, all of these countries are trading in local currencies. They're trading rupee for for ruble digital. They're trading, yuan for oil, and that yuan is convertible into gold in the Shanghai Gold Exchange. And all of these local currency tradings that are being done instead of the dollar is first and foremost. Project Mbridge is a vehicle or a platform to allow these countries to seamlessly trade back and forth with one another. Without interference of the SWIFT system. No Western intermediary banks. The dollar is not compatible with Mbridge, and Saudi Arabia just became a full participant in Mbridge. And what they are attempting to do, at least that's what Dilma Rousseff said, the head of the BRICS New Development Bank, former president of Brazil, is that we have agreed in principle to a common settlement currency. It is not a common BRICS currency. This is where people are going astray. They don't have to have a common currency in order for this to work, but a common settlement currency that is pegged 40% to gold and 60% to BRICS plus currencies eliminates the need for a common currency. Each country will have their own system, their own CBDC, their own monetary system, their own little economy that they have to manage and do so in a prudent way. They will not be reliant upon having to go back and forth in and out of dollars to transact with other countries and stand to the KYC and AML problems, the anti-money laundering and know your client, and the cost and the inefficiency and the time, when they can have a common settlement currency, which is addressed by having the gold held within this ecosystem. These unit tokens that they mint are held within the borders of the countries that possess it. They don't even have to send it to a central authority and have it independently and continuously audited. So when we talk about these fallacies that keep popping up that underestimate the relevance of what is happening, this group that is forming, I think they are grossly underestimating the intelligence and the sophistication of these countries who understand exactly the pushback. And instead of making a common currency with a common central bank, everyone holds their own autonomy. But when it comes time to settling, if I got too many rupee or I have too many ruble, I want the common settlement token. Well, that's gold. And that's gold's role. And that's why the BIS reclassified it tier 1. And that's why all the countries have been bringing it home, because it will be part of a new system. This is really important for people to understand. And I think it's a trend that's growing. It's literally accelerating. And you can see it in the price of gold. Well, one other thing I'd like to mention, a lot of people say, well, okay, fine. If all of these countries are accumulating gold, what does it mean for silver? And there are some very important things to understand about silver. Number one, first and foremost, China is the number 2 largest producer of silver in the world. And they, for many years, have been a net exporter because they mine all of these other metals. And if you remember, silver is largely a byproduct metal, where in North America, or I guess in all of the mining companies out there, only account for about 25-30% of the silver that comes to market.
What do you think of Andy's take? Do you think gold and silver price manipulation will end up soon with prices soaring to record highs, or do you disagree with him? Post in the comments section your price prediction for silver by the end of the year, and share with the stackers your exit strategy or buying levels. Me personally, I'd be looking forward to unwind a significant portion of my silver at $50 and would be selling all my stack if we get past $100. Now watch this video right here because it's a perfect fit for you. I'll see you on the other side.